So the market's in a free fall and your investments are tanking. What do you do? How do you cope? I'm going to teach you some top tips on how to actually cope when the market is extremely volatile. I'm Lindsay Sparrow. You can follow me at Buy the Latte or subscribe to my YouTube channel. Okay, number one, market is declining. You're watching your investments go down 10, 20, 30%. It's extremely painful. The first thing you do is you stock up on wine. Stock up on wine, stock pun intended. So you've got your wine. First, check mark, perfect. Okay. Second, you need to think about your goals and why you invested in the first place. So are you saving for retirement? Are you saving to buy a house in 5 years? What is really happening? Why did you invest in the market? What did you need the market to do for you when you initially put your money in? If you can bring yourself back to those goals, that will help you hold on so that you don't make an irrational decision and sell at the wrong time. It's important to realize that you are going to be emotional. So this is number 3. You have to keep your emotions in check. Every ounce of your body is going to want you to do something. It's going to want you to sell your investments, make investment changes, move to cash, buy more bonds. This is the wrong time. You missed the boat, okay? You're in it now. And the only way to survive it and to not make an investment decision that's going to hurt you for years to come is to stick with it and think about your long-term plan. One of the things that will drive your emotions is going to be constantly checking your stock app or looking at your investments online. You want to avoid this at all costs. So when your investments are going down, you actually experience this 3 times more than when you experience your investments going up. So if you understand what I'm saying, when your investments go up, you're like, meh. When your investments go down, you're like, oh, that's what really happens when you're constantly checking out your investments and seeing your money move around. So you want to check your investments very rarely. In fact, don't even open your investment statements. Just leave those in the corner and give your investments time to come back. Let the market recover and then worry about opening your statements. Remember, this is a paper loss. The only way you actually can see a loss with your investments is by actually selling. Now you're actually solidifying that loss. Up until this point, it's just a paper loss. And remember, you committed to investing knowing that your money was going to move around a bit. But this is the price that you have to pay in the short term to have a good long-term average. Those are the tips I have. Remember, drink wine, delete your stock app, turn off your news feed, that's another good one, and just keep your emotions in check and remember to think about your long-term goals and why you started to invest in the first place. Again, I'm Lindsay Sparrow at Buy the Latte, and remember, subscribe to my YouTube channel or click below for more resources on how to financially plan and invest.